What you're about to hear, no one in Washington wants you to know. Because this isn't just an oil deal gone sideways. And the United States, it just got ghosted by its nicest neighbor. This is a full-scale betrayal. Canada shut down over 11 million barrels of oil, headed straight for U.S. refineries, in a move that blindsided every analyst. No warning, no backup, just silence. Then a bang, gas prices spiked, food prices followed, and the economy hit turbulence fast. But Canada didn't just walk away. They walked straight into the arms of China and India, with billion-dollar deals. No red tape and no room left for the U.S. So what happens now? Why did Canada flip the switch? What did Washington miss? And is the American economy sleepwalking into its own energy extinction? Stay locked in, because by the end, we're not just talking gas prices. We're talking power grids, food supply, economic collapse, and the final insult Canada hasn't even delivered yet. The Golden Pipeline is gone, and it's not coming back. Canada doesn't need to ask for permission anymore. Not from the United States, not from anyone. With the completion of the Trans Mountain Expansion project, Canada now has the infrastructure to ship up to 890,000 barrels of oil per day. Not through U.S. routes, but directly west to global markets. Ports in British Columbia now connect Canada's energy sector to Asian economies hungry for oil and willing to pay handsomely. This wasn't just about moving oil, it was about shifting leverage. The United States assumed Canada would always play the quiet neighbor, happy to ship oil south and comply with Washington's trade demands. That illusion shattered the moment Canada turned its pipelines toward Beijing. Long-term contracts have already been signed, 15-year agreements with both China and India, locking in 325,000 barrels per day to each. These are deals that don't include American tariffs, don't require political handholding, and offer higher profit margins. The message was clear. Canada is no longer America's backup generator. It's building its own grid, and as Canada courted new partners, from best friend to business first, while Canada inked strategic partnerships, Donald Trump played a different game, chaos. Instead of stabilizing the energy relationship, Trump reignited old trade wars, steel tariffs, dairy disputes, auto part battles. Everything became a battlefield. The administration acted like a jilted lover, slapping economic punishments on its former ally instead of asking what went wrong. Meanwhile, Canada kept signing. China's state-owned CNU and India's ONGC committed to massive oil contracts, fully bypassing American middlemen. The deals weren't just about dollars. They were about removing Washington from the conversation entirely. American workers started to feel the pain. Refineries slowed, truckers drove longer routes for pricier fuel, and food distribution chains began to crack. And still, Trump bragged about winning. Winning what, though? Goldman Sachs issued a warning few noticed, but everyone should have. If the current oil disruption continues, the United States economy could shrink by 0.8%, enough to tip the country into a shallow recession by the second quarter of 2025. This wasn't just a supply issue, it was a trust issue. And Trump broke it, but this wasn't just about numbers and pipelines. It was about influence. Because while the United States fumbled oil, the global power map was being redrawn. America's recession trigger has a maple leaf on it. Canada's pivot was more than economic. It was geopolitical. With Washington sidelined, Canada stepped onto the global stage and started playing hardball. Its energy redirection wasn't just about higher prices. It was about aligning with the future. And that future, it doesn't involve the United States dollar. More than 20% of global oil trades in 2023 were executed without the U.S. currency. Instead, nations used gold, yuan, or direct currency swaps. And Canada, once an unquestioned pillar of Western alignment, began to flow with this tide. This realignment sent tremors through global finance. The dominance of the petrodollar has long given the United States strategic leverage. Lose that, and you lose influence far beyond barrels. At the same time, Canadian leadership signaled a broader move toward economic independence. Prime Minister Mark Carney hinted at less reliance on American markets, tighter alignment with non-Western trade blocs, and a national strategy to keep domestic energy decisions free of U.S. pressure. The United States wasn't just losing oil, it was losing its seat at the energy table. Every step Canada took pushed America deeper into vulnerability. Prices for gas weren't just spiking. Prices for everything that depends on fuel, food, steel, air travel, construction materials were creeping up in kind. Steel mills in Michigan faced raw material hikes of over 22%. Meat and produce prices began rising weekly. By the time Washington realized the scale of the rupture, it was already too late. And that 0.8% GDP dip? It could get worse, much worse, because this wasn't just an oil reroute. It was a declaration. Canada doesn't need the United States anymore. And the only thing more dangerous than a former ally walking away is when that ally decides never to look back. But this was only the beginning. Trump's oil panic and a wild threat to BRICS. He didn't just threaten BRICS, he tried to bully the entire global economy. Donald Trump stood before the cameras and announced a 150% import tariff on any BRICS nation that even considered dropping the United States dollar. He wasn't whispering, he was shouting. And behind that shout was fear. Fear that the world was moving on without him. What happened next? Markets around the world shuddered. Wall Street took the first blow, with tech and energy stocks plummeting. The dollar, usually the safe haven, looked less invincible. Financial institutions didn't know whether to panic or wait. Some chose both. Global leaders were caught off guard, scrambling to respond without escalating further. Major corporations braced for impact. Quiet phone calls between central banks replaced public statements. Behind closed doors, allies questioned whether Washington had lost the plot. BRICS, once seen as a mere acronym for Brazil, Russia, India, China, and South Africa, had become something more. A club of economies that once felt marginalized by Western dominance now had gold-backed currency on the table, blockchain infrastructure linking their banks, and the ambition to bypass the United States dollar altogether. When Canada sent over $100 billion worth of oil to China, it wasn't just trade, it was a symbol. The West no longer had the monopoly on global energy diplomacy. Trump's reaction wasn't calm, it was desperate. His team released a statement declaring economic warfare on BRICS members, accusing them of sabotaging global stability. But investors knew better. The only real sabotage was coming from Washington. In an already fragile economic climate, such threats weren't strategic. They were explosive. This wasn't Trump defending the dollar, it was Trump defending himself. When you can't win oil, blame the milk. And just when it seemed like oil diplomacy couldn't get messier, Trump changed the subject. His new target? Dairy. In a fiery speech in Pennsylvania, Trump claimed Canada was slamming the United States with 270% tariffs on milk, butter, and yogurt. The crowd gasped. American farmers cheered, but economists scratched their heads. Was that even true? Sort of. Canada's dairy tariffs are real, on paper, but they only apply if import quotas are exceeded. And for the past 3 years, the United States hasn't come close to breaching those limits. In fact, over $1 billion worth of United States dairy exports crossed into Canada tariff-free every year. So why the outrage? Because the truth didn't matter. The narrative did. And the narrative was betrayal. Trump needed someone to blame for rising grocery prices, for farmer frustration, for the fact that energy independence was slipping through America's fingers. Milk became a weapon. Social media lit up. Outrage spread. Videos of spilled milk, angry ranchers, and weeping cows became the latest propaganda loop. Fox News ran segments comparing Canadian dairy policy to economic terrorism. And through it all, Trump nodded, smiled, and kept talking. The manipulation was masterful. The outrage was effective. And the truth? It was buried under a mountain of misinformation. That's when Canada fired back. The Tesla freeze, retaliation, or rigged? 43 million Canadian dollars. That's the amount Canada froze in rebates originally earmarked for Tesla buyers. It wasn't just a policy shift, it was a message. Canadian officials accused Tesla of exploiting the electric vehicle subsidy system, flooding dealerships with demand just before the rebate budget ran dry. In just one weekend, over 8,000 cars were sold. Canadian regulators saw a pattern. They didn't like it, and they hit pause. Tesla, of course, denied any wrongdoing, but the timing was too perfect to ignore. Days earlier, Trump had imposed a 25% tariff on cars imported from Canada. And now Canada was turning off the tap, not just on oil, but on electric vehicles too. It felt personal, and it was. Elon Musk, often seen as Trump's silent ally, suddenly found himself in the middle of a geopolitical proxy war. Canada's Minister of Transport made it clear taxpayer dollars would not be funneled to companies manipulating market incentives. The subtext was louder. This was political retaliation, not just regulatory housekeeping. Tesla stocks dipped. Dealerships panicked. Customers who had been promised rebates were left in limbo. And in the background, Musk said nothing. But this wasn't just about Tesla. It was about Trump. It was about the tariffs, the threats, and the unraveling of decades of trade trust between the United States and Canada. The freeze sent a chill through Silicon Valley. If Canada was willing to go after Tesla, who was next? Within days, Canadian officials were reportedly reviewing subsidies for several other US-based tech firms. Whispers started circulating around Ottawa about a broader shift in policy, one that would favor domestic players and penalize foreign giants aligned too closely with Washington. Quiet meetings were held with emerging Canadian startups. New legislation was fast-tracked to redirect funding toward homegrown innovation. The message? If your business strategy depends on American political favor, you're no longer guaranteed a seat at Canada's table. And then, Trump doubled down. Trade war theater. But America's paying the price. The stage was set. The actors were ready. The spotlight was hot. But the audience? They were suffering. In Trump's trade war theater, every new act brought a fresh announcement. A new enemy. A dramatic gesture. But offstage, real people were paying the price. Inflation surged. Gas hovered near $5.25 per gallon. Steel prices jumped. Food costs spiked. Even a carton of eggs felt like a luxury. It wasn't just the tariffs. It was the uncertainty. One day, tariffs on Canadian aluminum were lifted. The next, they were reimposed. Mexico got a waiver. Then it didn't. Auto parts crossing the border 6 times during production now carried 6 times the paperwork. The supply chain cracked under the weight of unpredictability. Small businesses stalled. Major corporations paused hiring. Farmers canceled equipment orders. Families skipped vacations. The economy slowed. And all the while, Trump insisted things were going exactly as planned. He even proposed expanding tariffs to European allies, Germany, France, the United Kingdom. Why? Because they were doing business with BRICS, and because they didn't agree with him. And while he waged war on trade partners, American factories sat idle. Manufacturers couldn't access raw materials. Construction projects were delayed. Electric vehicle startups missed deadlines. Auto workers worried about layoffs. For every press conference claiming victory, another company filed for bankruptcy protection. Economists called it death by 1,000 disruptions. Meanwhile, Canada signed new energy contracts with China and India, laughing quietly from across the border. They weren't in a trade war, they were in a trade boom. Their ports were busy, their pipelines were full, their economy was growing. And the United States? It was watching from the outside. But the worst wasn't the economic damage. It was the erosion of credibility. Global markets once saw the United States as the anchor. Now they saw chaos. Allies hesitated. Investors reconsidered. Even Wall Street began to whisper the R word, recession. And still, Trump performed. He tweeted. He rallied. He blamed Canada, BRICS, milk, and Musk. But never himself. Because for Trump, the chaos wasn't a consequence. It was the plan. The next chapter? It begins where the damage finally hits home. When Wall Street turns red, when factories go quiet, when voters realize the trade war has no winner, and when the man who started it all still refuses to end it. Canada's energy empire is real, and it's not American anymore. It was once unthinkable. Canada, long viewed as America's energy security blanket, has now redrawn the global map. The United States depended on its neighbor to the north to keep oil flowing, refineries humming, and gasoline prices somewhat stable. But that era is gone. Canada has built something bigger, stronger, and completely independent. And it is no longer looking south. At the center of this transformation is the Trans Mountain Expansion Project, an infrastructure giant that unlocked a gateway to the Pacific. With it, Canada now has the capacity to ship up to 890,000 barrels of oil per day directly to markets across Asia and Europe. For the first time in modern history, Canadian energy exports no longer require American ports, pipelines, or permissions. This is not just a logistical upgrade, it is a declaration of sovereignty, built on a decade of political resolve and billions in public and private investment. Asian demand, particularly from China and India, surged in recent years. Both nations, facing explosive growth and energy insecurity, offered Canada something Washington never did: top dollar and no strings. Beijing signed a 15-year deal to purchase 325,000 barrels daily. New Delhi followed with its own massive contract, and in doing so, they elevated Canada from junior partner to global player. Europe, too, came calling. Desperate to replace Russian energy, the European Union fast-tracked long-term deals with Ottawa. Canadian ports on the east and west coasts now operate at record capacity, loading ships not for Houston, but for Hamburg, Rotterdam, and Shanghai. Behind the scenes, logistics firms have quietly restructured major shipping lanes, rerouting tankers away from Gulf Coast refineries and into international trade zones. This pivot wasn't just strategic, it was emotional. Canadian energy companies complained of being treated as second-class suppliers by American lawmakers and regulators. Delays, tariffs, threats. Washington acted as if Canada had no choice but to obey. But now, with multiple continents eager to do business, Canada is no longer begging for access. It is commanding respect. In the United States, the emotional fallout is as sharp as the economic. Losing control over a key ally's energy exports feels like watching the steering wheel get yanked out of your hands while speeding down the highway. Panic is setting in. American policymakers assumed the partnership was permanent. They assumed wrong. And this loss of control, it was just the first blow. But before I talk about that, take a moment to subscribe. You would be supporting us for free. Power shift. The United States isn't at the table anymore. What happens when the world's most powerful economy no longer controls the currency of energy? The answer is unfolding now, and it does not look good for Washington. Enter BRICS. Once just an acronym for a handful of fast-growing economies, BRICS now stands as a rising global counterweight. With the inclusion of Egypt, the United Arab Emirates, Ethiopia, and Cuba, the alliance now represents over one-third of the world's total economic output. And they're not just collaborating, they're actively building a parallel financial universe. The most explosive moment came during the BRICS summit in Kazan, when Russian President Vladimir Putin unveiled a prototype gold-backed currency designed to settle international trade without ever touching the United States dollar. It is paper, yes, but infused with blockchain technology, decentralized storage, and an unspoken message. The old rules are over. Energy was the first battlefield. In the previous year alone, over 20% of global oil trades were completed without using the United States dollar. This is no longer an experiment. It is a functioning system. And as Canada, China, and India deepen their energy ties, each of them is quietly adopting this shift. For Washington, the implications are massive. The strength of the dollar has always depended on being indispensable. But now, key players in global trade are proving that energy commerce, long the dollar's backbone, can survive without it. Worse, they are thriving. Diplomatically, America is adrift. While it plays defense, others are executing bold strategies. Former allies are hedging their bets, investing in new financial structures, and leaving Washington out of key decisions. BRICS leaders now hold summits without extending invitations to the United States. Foreign ministers from South Africa and Brazil openly call for a multipolar world. And Canada? Canada is no longer whispering about independence. It is shouting it across oceans. But the clearest sign of the shift isn't in speeches or summits. It's in contracts. Long-term billion-dollar deals are now being written in yuan, rupees, and euros. That silence you hear from Washington? That is what irrelevance sounds like. And still, the worst was yet to come. Energy winter, and the lights are going out. While the global order reshapes itself, American homes are going dark, literally. The abrupt halt of energy exports from Canada triggered immediate chaos across the United States. Hydro-powered electricity supplies plummeted in northeastern states. New York, Vermont, and even parts of Pennsylvania issued warnings of rolling blackouts. By the time winter hit, it was too late to pivot. California saw power prices spike by over 40%. Families rationed electricity during peak hours. In Michigan, steel mills operated at reduced capacity due to gas shortages. Refineries, once operating at nearly 90% efficiency, fell to 71%, sparking fuel shortages nationwide. Public services felt the blow. Schools reduced hours to save heating costs. Hospitals in rural areas struggled to maintain emergency power. Airline ticket prices soared as jet fuel costs tripled, and millions of working-class Americans began choosing between groceries and gasoline. Industry leaders begged for federal intervention. Governors held emergency meetings, but nothing worked. The infrastructure simply wasn't ready to replace what Canada once provided. Alternative sources were either too slow or too expensive. By the time Washington tried to negotiate, Canada had already moved on. The emotional toll matched the financial pain. People felt abandoned. They turned on their televisions and saw Canada making deals with countries that had once been adversaries. They listened to analysts on the radio explaining why the United States had no leverage left. They scrolled through social media and saw viral videos of European cities celebrating their new Canadian oil shipments. It was a winter of humiliation. And still, even after the blackouts, even after the shutdowns and the despair, there was one more twist left. Canada's transformation didn't happen overnight, but it now feels inevitable. Once seen as America's polite neighbor, it has become a bold geopolitical force. Prime Minister Mark Carney declared, "Canada must chart its own path for our future and our sovereignty." Parliament erupted in applause, and soon, bold new laws followed: taxes on American tech, agricultural import caps, and the removal of Tesla from the national subsidy list. Washington was furious. Trump called it betrayal. But Canada wasn't turning on liberty, only on dependency. With new allies, redrawn policies, and rising confidence, Canada no longer asks for permission. It simply moves forward. It may not be a headline. It may not be a speech. It may simply be the quiet confidence of a country that no longer asks for permission because it does not have to. Wall Street just sounded the alarm. It started with a whisper, then turned into a scream. Within hours, the New York Stock Exchange resembled a house on fire, and every exit was jammed. The Dow Jones Industrial Average lost more than 1,000 points in a single trading session. The Nasdaq Composite followed suit, plunging over 3%, its worst performance since the financial crisis over a decade ago. But the real story wasn't the numbers. It was the panic. Investors weren't just reacting, they were evacuating. Foreign capital flowed out of American markets at a pace not seen since the 2008 crash. Why? Because this wasn't just another fluctuation. This was systemic. Canada's decision to redirect $104 billion worth of oil to China had kicked off an energy shortage that America was nowhere near ready for. Wall Street's response? Pull back, cut risk, brace for impact. Chief executive officers from the largest companies in America flooded the White House switchboard, demanding clarity. But what they got instead was a barrage of conflicting statements from administration officials, and one late-night post from the president praising Elon Musk's economic patriotism. No mention of the collapsing market, no roadmap, just chaos. The institutional fear wasn't quiet. In emergency meetings held behind closed doors, hedge fund managers, pension administrators, and private equity heads asked the same question. Is this what losing global confidence feels like? The answer echoed in every falling stock price and every cautious investor call. The flight wasn't just about oil, it was about trust. Factories stopped. Prices didn't. If Wall Street was the heart attack, Main Street was the slow bleed. Across the country, factories didn't just slow, they shut down. Auto plants in Michigan, Ohio, and Kentucky went dark as suppliers ran dry. The cost of raw materials, especially steel, aluminum, and lithium, had surged over 30%. Ford Motor Company announced that its flagship electric truck, the F-150 Lightning, would be delayed indefinitely. General Motors said it would be restructuring its EV division. Code for layoffs. Tesla, still reeling from its subsidy scandal in Canada, slashed production targets. But while the production lines stopped, the prices didn't. A basic sedan, once priced at $29,000, now carried a tag of over $38,000. Replacement parts were scarce. Dealerships were ghost towns. Consumers who had hoped to transition to electric vehicles were now stuck between unaffordability and unavailability. No relief came. The government proposed a fuel credit that never made it past committee. Meanwhile, the Department of Energy quietly warned that strategic reserves were not equipped to offset this scale of disruption. And just when the public thought prices couldn't climb higher, they did. Car prices, home heating costs, grocery bills, all marching upward with no signs of slowing. For the first time in decades, inflation felt personal, not as a talking point, not as a data set, but as a daily, grinding reality. That's why we want to hear from you. Comment your thoughts down below. Let's start talking. And don't forget to like this video and subscribe to our channel. Thanks for watching till the end, and I will see you in the next video.